Hi there, Serial Trader here. I'll do a weekend update on the major indices and starting with the SPX chart. So just looking at our daily chart as far as the wave count is concerned, I think we're pretty close to ending this fifth wave of possibly a larger one wave off the March lows. And then the next move I'll be looking for is some sort of pullback in a second wave. And minimum target probably back towards the previous fourth wave area, so 2700 in that range. If we just do some fib retracements, let's just assume that the top is in place. I'm not saying it is, but just for purposes of exploring this. So let's just look at some fib levels. And you can see even just a 38.2% retracement of this initial 5 waves up, which would be quite a minor retracement, would still get us down into that 2700 area, low 2700s. And then, of course, a more normal retracement, 50% or 61.8%, gets us between 2600 area. So those are some areas to look for on a pullback. And assuming it develops in a nice corrective manner, of course, we don't know what it's going to look like until it starts developing, but assume that we get something like this, a nice non-threatening 3-wave correction into one of these fib levels after doing a nice 5 waves up off an extreme bottom. That'll be I think a pretty attractive long entry, but we have to wait for it to actually form before making that kind of decision. Right now, I think the next move of significance should be a nice pullback, a nice corrective pullback. And of course, if it really just starts dumping hard and aggressively, maybe we'll have to reassess what that means, and maybe we're actually doing something more bearish. But as it stands right now, let me just get rid of that little trend line there. As it stands right now, it looks like we have a clean 5 waves up off the bottom. Pretty mature looking here, and definitely looking for a correction down. And I'll get to some other reasons why it looks like we're ready for some downside here pretty quick. So this is just, the daily chart of SPX. Now what I want to do is, since there's so many gaps here in our fifth wave, it makes it difficult. So if I go into the hourly chart of SPX, there's a lot of gaps here. So I think it's a good idea to look at the futures, because sometimes the patterns are pretty clear on that, even though there's all these gaps on the SPX chart, because a lot of action happens overnight, etc. So let me do that. And so on the ES chart here, this is the equivalent wave count on ES. So we had our wave 3 there. We had our ABC pullback in a wave 4. Now I believe we're working this fifth wave. And within that fifth wave, I can count 1, 2, 3, 4, 5 pretty distinct clean waves. So it's possible that we already have the top in place here on the futures at 30.65.50. Although we got extremely close to fully retracing that towards the end of Friday there. So I wouldn't be overly confident. But this fifth wave looks very mature. And if we just do one that, the Fibonacci divider technique, and that's where, you want the termination point of wave 4 to have a common relationship. So like 50%. So we're just above that 50% level for wave 4 to divide the whole sequence, and that that would give us the likelihood of the top being already in place or close to it. Now, if the divider has to be higher, so if the fourth wave has to be like a 618 divider, that would put us up here. And let me just get the levels here to look at. That would put us up here, somewhere in the low 3100s perhaps, if this ends up being a 618 divider of the whole sequence. But as it stands right now, perfectly acceptable right where it is, around that 50% fib divider level. And basically, we're just looking for some downside action to confirm that. And what can I throw up there that'll help us do that? We could do the Elliott final channel here. And that's where you connect wave 2 to wave 4 off of wave 3. And you can see so far we're finding resistance off the median line of the channel. And if we can actually get below this lower trend line of the Elliott channel and start staying below it, that should confirm that, okay, we're finally done this fifth wave impulse and we're pulling back in a more meaningful way. So we're just waiting for that confirmation. It looks very mature, and I think that's all I wanted to point out there as far as the wave patterns go. Now let's go over to the Thinkorswim candlestick chart, because there's some other things to point out. All right, so daily candlestick here. Looks like another bullish candle on Friday. Looks like a reaction off right around that T line and 200-day moving average, so acting as some short-term support. Very overbought on the oscillator here. And, we filled this gap. It was just around 3,000. So I think we're vulnerable here to a reversal, but no signs of it yet on the daily candle. Weekly candle. Weekly candle, nothing to speak of there. We're back above the 50-week simple moving average. And certainly not a reversal candle there yet. So nothing really displaying on the weekly chart as far as sell signal of any kind. Okay, so that's the SPX. Let's go over to the Dow. Now on the Dow, similar idea. Little hammer style candle on Friday. But it actually still closed slightly lower on Friday. So a little weaker relative to SPX. We're still well below the 200-day simple moving average on the Dow. And is there any gap around to fill? No. So the gap to fill on the Dow was over here. That's already been done. And that was around 25,226. So the Dow not really showing much here on the candles yet. This candle here on Thursday was possibly a dark cloud cover candle. And that's where you open well above the previous candle, then close well back into its the range of its body. So it's a bearish reversal candle, but it's a weaker one, and it requires further downside to confirm it. So right now you just have a potential dark cloud cover candle on the Dow. Let me just double check if that was the case on SPX. Not as much. You could argue that maybe that was kind of an inverted hammer, but it just doesn't look that compelling to me here on SPX. The Dow's candle there on Thursday looks a little nicer as far as a potential bearish reversal candle. But again, we're still above the T line, so we need to start closing below that daily T line to confirm that there's at least some sort of pullback taking place. You can see on the oscillator here, Dow very overbought, so it's certainly vulnerable to a reversal soon down. Weekly chart on the Dow, nothing there. Still well below the 50-week simple moving average on the Dow. So the Dow is clearly the weaker index here. But other than that, there's no signs of reversal yet. Okay. So we'll go over to the NASDAQ. And on the NASDAQ composite, we're very, very close. You see we've tried to fill this gap from way back here from just basically two candles below that all-time high candle. That's where our gap was created. And 1, 2, 3, it looks like so far 3 kind of attempts at going up to fill that gap. So to actually fill the gap, this is where that horizontal line is. That's what it's representing. To actually fill that gap, we'd need 9,542.33 on the NASDAQ composite. And we got real close there on Thursday. We got up to 9,523.64, but didn't quite fill it. And you can see there's a couple attempts here to reverse on the NASDAQ, but then Friday we closed right back up near the high end of this range. So still undecided on the NASDAQ. It wouldn't be surprising at all to fill that gap, but then perhaps that'll open the door finally to getting more of a reversal and a correction down. I kind of doubt we'll just go and take out the all-time high without having a little correction first. I could certainly be surprised. The NASDAQ's certainly been strong, but I think once that gap is filled, perhaps that'll lead to some profit taking, some pullback, some correction. But hey, can't rule out an all-time high right away on the NASDAQ composite, as crazy as that sounds. We're just so close to it that it's just not out of the realm of possibility at this point. But what I'd like to see is, a top basically from near current levels and a pullback, and then that'll set up a more interesting long trade setup. But not there yet. NASDAQ composite weekly. What do we got here? Okay, so interesting. So we have a potential hanging man candle, which is bearish if it confirms and reverses down. But again, we've seen these potential bearish reversal candles on the NASDAQ weekly before, like here, and they both failed, and it just kept going up. So will this one fail, or will this actually be a legitimate reversal candle? I think we'll find out this coming week. So stay tuned. Okay, that's the NASDAQ composite. And let's go over to the VIX. So the VIX is interesting. It's close to its 200-day moving average. And it looks like it's just kind of basing out here and finding a range to potentially launch off of. So the fact that the market has continued to go up and the VIX has not continued to go down, I think is a bit of a warning sign from the VIX. But let's go over to the VIX VVIX tool, because that's actually shaping up in an interesting way too. So on the VIX VVIX tool, so SPX has been making new highs. Now VVIX has been making new lows, but VIX so far has not been making new lows. So you have the VVIX VIX divergence, which is the first sign that potentially a reversal is coming. In this case, a reversal down for SPX and a reversal up for the volatility products here. So what we want to see now is VVIX and VIX to continue the divergence, where VIX does not make a new low, despite VVIX making a new low. Then we want to see VVIX get above the red moving average. And then, of course, confirmation is SPX getting below and staying below the blue moving average. So we only have step one of the signal. But I think it's interesting here that VIX is not making new lows, despite the market making relative new highs. I think that's a sign that big money is piling in to potentially put options, and because of that, the implied volatility of those put options is staying high or not going down, which is basically what VIX is measuring. So that's why VIX is not going down anymore, despite the market still grinding higher. So that usually happens at important turning points, and I think we could be on the cusp of that right now. Also, we just ended the last trading day of the month. We're about to start a new trading month in June. You often see, relative highs or lows for a month happen in that time frame. So that would suggest that maybe we've seen an important high as of last week, or that we'll see an important high early this week, and then finally start correcting downward. But no confirmation yet, but just something to be aware of. I think we're at an important kind of juncture here. We're very mature in this rally off the March low. It counts as 5 waves. Within that 5th wave, getting back to our SPX chart, within that 5th wave, certainly on the futures, within that 5th wave, we're looking mature. So a lot of things are kind of lining up here to suggest that the next significant move should be at least a corrective pullback, if not something more. So my eyes are on that this coming week. Yeah, that's all I want to say for now. Let's see what happens. Serial Trader signing off.